Family radio for a really great future. We're talking real money.
Children. Children. We love them. We bring them up. We raise them. And we hope that somewhere in their early 20s, they, well, not go away, but get off the dole. we would like to stop picking up the tab. Hi, everybody. I'm Don McDonald, one of the parents of adult children, and joining me is the other parent of adult children, Tom Cock. We are here to talk real money, and today we're talking real money that we're still sending to our adult children. We both know the feeling. Hi, Tom. Hi.
It's painful.
How's the pocketbook?
Yeah, it's painful, and we'll talk about the do's. I think the do's and don'ts. It's very personal. There is no right or wrong decision with any of this because it's for a variety of reasons. Everybody comes
curious,
up with their own.
My daughter just got laid off from a job.
Yeah.
And, of course,
I'm sure she's going to love the fact that you're publicizing that to everyone on the podcast.
Well, I'm trying to get her a new job. I'm going to just okay. She got laid off, and, you know, it's she lives in New York City, of all places. So
right.
Very tough place to make ends meet when you're out of work. Temporarily, we hope. Of course, it's temporarily.
Sure.
But even when they're past college, sometimes as parents, we still have to hand them some money. But what I was getting to is, Debbie, we were talking about it the other day, and she goes, "What did we do wrong?" And I went, "We didn't do anything wrong. This is just stuff that happens."
Yeah, and today's numbers are fairly astounding. They didn't, in this article from the Wall Street Journal, give any comparison to like 20 years ago, 30 years ago, but it says 60% of parents with children ages 18 to 34 said they had helped their kids financially in the previous year.
Wow. In the previous year.
That's like 2 out of 3.
Yeah,
I mean, that's a whole lot.
That means that of that other 40%, a bunch of those probably helped them in the previous 5 years or might in the next 5.
Exactly. And the article focuses on one couple that's saving $1,000 a month for their 7-year-old daughter, and not for college or summer camp or medical expenses, but for when she's an adult, so that the money will already be there and she won't have to ask for it, which I think is odd. I don't know that I got to tell you right now, it doesn't feel that odd. As it's happened a couple of times
in her young adult life. It's almost, had I thought of it, it might have been a wise decision.
And we've in our household, we've had every adult child, save for one, move back in with us at some point. But
that too,
number,
we've had that.
And
I would have never thought to move in with my parents in my 20s ever.
Wouldn't have crossed my mind. It says a third of younger millennial home buyers got help with a down payment from friends or family. So 1 out of 3 that, you could see that. That's exceptional.
I was just going to say that's a special circumstance. It's the ongoing support in adulthood that kind of concerns me, and I think it's indicative of some bigger problems societally and economically, maybe.
Well, they quote an advisor in this article who thinks it's Don. The problem is not your children. The problem is you.
Yeah,
it's us. He says he considers it a mission to shake the stigma of helping children overcome these obstacles. He said he lived rent-free with his grandmother till he was 26, paid down his student debt, saved up $30,000, bought a home before his 30th birthday, something few of his friends have been able to accomplish even today. He tells, at the very mature age of 38, he tells his clients to prepare ahead of time to help their children do the same.
Okay, so he's saying that helping them is okay.
Yeah, right. He's saying get over it.
Because at first I thought he was going to say, well, it's your own fault for enabling your children, you little
No,
enablers.
He's saying the exact opposite. He says, get over it, help the kids. The kids are okay. So let's...
If you can afford it.
Well, that's my number one thing here, because I have seen it, and I've seen it up close and personal. You know this, in my family, where my father-in-law, God bless him, was helping someone in his life. He couldn't afford it, but he was giving that person the money anyway, because he's like, I'll make it happen. And so can you afford it? That should be starting place number one, because I see people doing all kinds of weird and dumb things in their 60s when they got to retire in a few years that are going to impact that retirement. You should not allow that. You should have to tell your children, sorry, I don't have the resources.
Okay, let's spend a minute on that. Let's spend a realistic minute on that. That's the hard line approach. Okay, I don't have the money. You're on your own. Is that how far do you let your kids fall?
I think that's fair. Yeah, I mean, to the place where they, I guess, and we've seen this, right, are homeless.
Yeah.
Or, in real trouble, then that you can, and that's the threat,
that's
right?
rock
Look,
bottom.
Yeah, if you don't help me, then here's the alternative, right? That's bad. Which always brings me to number two, which, again, I've seen this up close. Why are they struggling? Is this a matter of motivation? Or I think, like with your daughter, bad luck, right? I mean, she's motivated. She's educated. She's worked hard basically her whole life. And she just had some bad luck working for an organization that didn't prosper, had to lay people off. So it had nothing to do really with her work ethic, but it had everything to do with her circumstance, I think. But why is that child in need of the money? What is it, again, is it they won't get out of bed?
Yeah, okay, that's a legitimate. What is the underlying cause of the lack of income?
Yeah. I think that's a fair thing to
so
ask. And
you should take
one.
that into account, is what you're saying. Is if the
think you
child
should.
is motivated and working toward a goal, and they just need help right now, help them out.
I think that's fair. And then I guess the third one for me, and maybe you're going to laugh here, is if your child wants your money, is it fair to say, yeah, I'll do it, but I want to know your whole situation? In other words, I want to know, how much you owe this guy, or what are we looking at here?
And
is that legit?
That's a source of battles I can attest.
It's people are going to say, well, why do you need to know that? I've had it again happen in my little household where I said, you want my money? I'm going to be the bank. Guess what? The bank needs to know, your financial situation before the bank loans out any more money.
My father-in-law, the colonel, who passed several years ago, was a meticulous numbers person, detail-oriented. As you know, with a colonel for a father, I had a colonel for a father-in-law.
Exactly.
He had a fascinating way of doling out help to his adult children. He kept a spreadsheet. He kept it on an old Mac gray, the beige Macintosh, the little tiny Mac. He had a computer in the 80s, and he kept a spreadsheet of everything he gave to his adult children. And it was then deducted from their portion of the estate on his death.
I was just going to get to that. Yeah, I mean, so because
it was very effective.
Yeah, if it's yes, if you're going to help them, then number one, I think there should be a limit. There should be like, here's what we're going to do, rather than this week it's the car payment, next week it's the whatever. There needs to be. It has to be like anything you're borrowing. Number two, I think your father-in-law is exactly right. It should be a loan, not a gift, because for several reasons. First of all, it's a business relationship. You need to make sure I still love you, but I'm doing this as a loan to try to help you out. And there's another part of all this that I've seen happen again many times. You wouldn't be surprised to know that when the parents pass away, it turns into a battle. No, dad already gave you XYZ money to do this.
Unless
that's
it's
why
written,
it should be a loan.
Unless it's
that's
written
right.
in the
Exactly.
documents.
Yeah, I think it has to. There has to be a formality to it, which brings me to the third rule for me. Maybe not for you. I think in this circumstance, this is an opportunity to provide some financial literacy. It doesn't mean that you tell them you can't go to Starbucks anymore, but it does mean, let's be honest about your resources, my resource. Like, here's how much, and here's how much, so that they have some idea about how money works. Because many, not just young people, many people don't know the basics of finance, and that's where most of this trouble starts from, I think. Most, not all.
Yeah, the financial literacy component is really critical. As a matter of fact, since you bring that up, this is an aside. I had my homeowners association meeting last night. I'm the king. of the HOA. I'm
You are,
King,
yeah.
King Don of the HOA. And we have a charitable foundation in town that does certain things for the community. Well, they partnered with Schwab, this foundation, to do a financial literacy class for high school students at our local high school.
Yeah, great.
It was I got to commend Schwab for this program because it wasn't about investing, because that's not what kids need to learn. They need to learn spending, budgeting.
Yep.
And what they do
Taxes.
is when they come into the all-day event, they assign them an occupation and an income, much like the old game of life.
Yep.
And then they go to different tables where they have to take care of life's expenses. How much of a home can you afford?
Sure.
Groceries, utility bills. And then there's a table full of surprises where you go there and, you may have $1,000 car repair that you got to come up with, and you're going, and they keep a tally of your income and your expenses and show you how much trouble you can get into. One kid said, I didn't realize that purebred dogs cost that much, because you could buy a purebred dog, I guess. And I gotta say, this is a pretty impressive program that Schwab put together, this is what kids need in high school before they become adults.
Yeah, and it's still, I think it's less than 1/3 of the states require high schools to have any formal financial education. I think that you're exactly right, Don. So, yeah,
and it doesn't need to be investing. That's one of the problems. Is that
everybody wants
the
to
financial
start there.
education is that everybody comes in and plays the stock market game.
Yeah, exactly.
Ugh.
I know. That's where it all. Oh, this is going to be exciting. Look, you could pick NVIDIA instead of McDonald's. That's
It's not
tragic.
how to be rich. It's how to avoid being poor.
And if you have those basic things, if you start them from age 18, even if you're going to college or whatever, the basic tenets, you're going to be in good place. So this is interesting. This is not. I interviewed an author about this similar topic way back when I had the TV show about allowances, about should you give your kid allowances or not. But this is this whole weird relationship you got to have with your parents about money, with your kids about money. It's ongoing. There is no right answer.
I was going to say, so what's our conclusion?
Well, my conclusion is, again, the things that I think, I think it should be a loan, not a gift. I think there should be some sort of limits. And I think that should be there should be some aspect of literacy to it so that people get better, right? It's not just, here's $100 because you'll be okay. You need to know kind of the whys of money and finance so that the mistakes hopefully are not repeated or they're done at a lower level in the future. I'll put it that way.
That's good advice. And we love taking your questions here on Talking Real Money. We take them in a variety of ways. We take them on Saturdays when we do a radio show via phone at 855-935-TALK from 3 to 5 Eastern Time. But we also take them when you send them in at talkingrealmoney.com, hit the Contact Us button, and then you either type them, and then they get answered on one of these kind of episodes, or you speak them, and they get answered on Friday's Q&A.
Yeah, we're getting a lot of them. Keep them coming. TalkingRealMoney.com. Contact us form. Easy to do. Angela writes us from Mount Airy, North Carolina. Have you ever been there, Mount Airy? That's Mayberry RFD? Okay.
It's Mayberry. It's actually the town on which Mayberry is based. It's the home of Andy Griffith.
And anyone under the age of 50 listening to this podcast or under the age of 60, under the age of 65 has no idea what you're talking
I have
about.
been there. I've been to Mount Airy. I've driven through, visited shortly, briefly.
So, speaking of gifting, etc., it says, I would like to get some more information on gifting stock to an older relative and then becoming the beneficiary on the account.
Somebody's listening.
You mentioned this on the show on the 9th of August. Mm-hmm. Are there any taxes to pay if I give $120,000 of stock to someone else? In other words,
nope.
I just give it to them.
Yep.
I have nowhere near a $13 million estate. Are there any special procedures I need to follow in order to make this legal and acceptable to the IRS? Also, is there a certain amount of time the person needs to hold? He can give it to them on their deathbed and then they give it back to you. I hadn't really considered that. If they were to pass away suddenly, would that cause problems with the IRS? The answer basically is no to all those things, right?
You
can
could
just do it.
You could give gifts up to your lifetime estate exemption, which
I
like
think is
13.
higher now than 13, isn't it? Like, didn't they raise it to like 15?
They raised it, but I don't think it was 15. I'm not sure what the number is.
It's a lot. Let's just put it that way.
But if you're gifting $120,000 at current market value in stock to someone else, you have to change the name on. They actually their name. They need
it's
to
their
be
money now.
the beneficial owner. You cannot have any control over it whatsoever.
But maybe we should go back and talk about this. This came up as a topic on the show, on the live radio show, where we said, here's a little trick. You can give the asset to someone else who is older than you. They die, and then they leave it to you.
Right, they leave it to you. But there can't be any legal stipulation to that effect.
Yeah.
Because then they're not the beneficial owner anymore,
By the way,
conceivably.
If there's anyone who wants to do that and make me that benefit, the person that takes the money, happy to be that person. So call me.
Really, you're going to volunteer?
Oh, I'm trying to help people here.
What a good guy.
Yeah. Oh, by the way, there is a minimum
no
$500,000.
conflict of interest there.
No conflict, slightly. Okay.
But $120,000 worth of stock, it's not going to be a problem.
No.
You give it to them, and you hope they make you the beneficiary.
Yeah, if they don't, well, then that was a bad decision. So, yikes.
Don't make them mad. Do not
be
make
nice
them
to them
mad.
for a period of time. Mark writes us from Seattle. I often hear the heavily advertised Legacy Northwest Fund promising a 9% return over a 2-year lock-in period with a track record of 0 loss. Legacy Northwest, Legacy NW. After being asked and looking into it, they even promote using funds from a 401k. Would you be able to comment on or have a take on this? It seems there must be some risk somewhere for a guaranteed 9%. Thanks, Mark in Seattle. He gave the website, which I don't want to give because I don't want to promote their product. But
it's a real estate
it is.
debt fund.
Yep.
And they promise a 9% return, but you got to commit for at least 2 years with no liquidity. And you get promissory notes.
Yeah. A promissory note is as good as the person writing the promissory note.
And here's the thing. I mean, they can claim a no negative return, and they can claim no defaults or a low default rate on their loans, and they can claim no foreclosures. But the reality can be quite different than the claims, because here's the thing. We want to believe, one, that people tell the truth. We just assume that if it's advertised, we've actually heard it hundreds of times from listeners. Well, they advertise that. How can they say it if it's not true? How can anybody lie? They're human. They lie.
Regularly.
Nobody is monitoring this stuff. Just count on no help from any type of regulator. Nobody's
and if anything
watching.
goes wrong.
We have talked about literally dozens, at least dozens, of these kinds of investments on our various shows over the years. And for the most part, I mean, I'm sure there are a couple of exceptions, but most of these end up stumbling or outright crashing or being total scams once you peel back all the layers.
And here's my take. If someone is going to give you, if you could earn 9 with no risk, absolutely guaranteed, there would be no stock market. Why would I ever invest in a group of stocks?
Right. Why would you take the risk of
makes no sense.
A 50% loss in the market value of your portfolio of diversified stocks? Why would you take that risk for a 9 to 10% average annual return, which has been the number for the stock market over 100 years?
Yep.
Why would you do that? If you could get 9% with absolutely no risk whatsoever, guaranteed in your pocket every month like clockwork? Because you can't.
Until it doesn't. All right.
They work exactly. This is my favorite phrase in finance. It appears they work right up until they don't.
Can't you just say favorite financial phrase?
Ooh, it's very alliterative.
Okay,
Yeah, it's my favorite financial
squeeze
phrase.
one more in from Joseph in Eatonville, Washington. Hello again, Tom and Don. Thanks for helping everyone understand the issues with buying annuities. Question. Every time I listen to your show, someone from my state of Washington will call in on how they're getting bamboozled by firms selling annuities. Why do our local radio shows and some TV show allow these firms to be on the air when they know they're going to sell the customers these garbage products? Thank goodness for you two and a few others on educating people on the truth. We need more shows like yours in Washington State. I will help pass along the word at work and gatherings. Take care, Joe. P.S. This is why I had to interview so many firms, LOL, because you got to find out the snake oil from the non-oil.
Why do radio stations take infomercials from firms that sell indexed annuities?
Let's see. It has something
a
to do with
question that has haunted humanity since the early days of radio. Why do we do the things we do? Why did radio shows promote cigarette smoking back in the 40s and 50s and 60s? Why?
Yeah, remember, and they were actually promoting the health benefits
of smoking. Why did they do that? Why did they do that? I'm trying to think of what the answer might. Oh, yes. Cha-ching.
Yeah. Because they can, and they can get paid a lot for doing it, and they literally don't care.
And exactly. Their argument is it's not our job to have a conscience.
No, exactly.
Our job, we're just here to make money. We're not going to pass judgment. And the other thing is that, trust me, the vast majority of the people selling these things have no clue that they're bad.
Or they're so deep in it that they're not bad.
No, I honestly don't think they know that they're bad. It's like insurance investment salespeople, people who sell annuities and whole life and the like. Honestly, I don't know, because they generally are young. Most of the time they're young, particularly.
That's true.
I don't think they know that what they're selling is bad.
And I last night sent you a brand new law firm.
I saw that.
Only their entire life, their entire job is going after the firm selling equity index annuities. That's all they're there for.
And the whole life things, yeah.
Yeah, right. Yeah. The really bad stuff. And this is
the bank on yourself.
They're going to be wealthy.
Yeah, what a great niche. What a great niche.
Like, that's going to work out really well. So
we sue insurance companies.
Yeah, I think that's your new part-time job.
I need to get a law degree.
Keep the questions coming. We love them, and we're here to answer them.
Yep, you can send them in, talkingrealmoney.com. At talkingrealmoney.com, too, you can also meet with one of our, well, you don't meet with them there, but you set up a meet with one of our advisors there if you need a little bit more help. And I promise you, they're not going to try and sell you an annuity. In fact, they're not going to try and sell you anything. They're just going to help you for the low, low price of only free dollars. Not free dollars, free of dollars.
I think people still have trouble believing that.
Yeah.
Some people, not everybody, because people call us every day, but yeah, we truly do. We take your portfolio, we analyze it for you. We have got a great program that's going to tell you how diversified you are, how much you're spending, how much risk you're taking, all those kind of good things. We do that absolutely free. And then you get to chat with an advisor for a period of time to kind of say, here's what I'm thinking. How's that look?
And the way you know that this is true is the fact that we've been doing Talking Real Money for about 15 years now and been doing that for about 15 years now.
Yeah.
And have yet to have anyone call the show live. We don't screen the calls out. We just take them. Or leave a review online that says, no, these guys are nothing but shills for their high-pressure sales pitch to become a client. We don't do that.
And you know how many reviews we now have?
A lot.
700 reviews.
Wow.
That's
crazy.
A lot of
reviews.
684 from my mom, but then there's another 16 people that did
She got that many done before she died?
Busy,
she was,
busy.
Wow.
Cranking them out.
Considering, I think, when did she die?
That would be 10 years ago. No, 15 years ago.
So she died actually before we even started the show. So
she's good.
She was doing prescient.
I'm going to do something for myself, like these other people. I'm going to do something for my son a long time ago.
Yeah.
in case
All
anything
right.
happens.
Thanks for being a part of the program. We really appreciate you being there, and we appreciate you, like the guy in Eatonville, Washington, telling everybody you know about the show. The more, literally, the more the merrier, because we think everybody should be talking real money.
The opinions and views expressed on this podcast were current on the date recorded.
Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone.
This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction.
Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor.
Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services.
Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.